There are two types of companies. So you can see over here in the private sector, we've done sole traders and partnerships, but we've got a private company, Pty Ltd, and a public company, Ltd. What do those words mean? We'll get to that. So first of all, how are they different? Well, there's two types. A private company, Pty Ltd, is an incorporated business, so a corporation. It's a separate legal entity to its owners or shareholders, but it is not listed on the Australian Securities Exchange, the ASX, or we might just say the stock exchange. How is that different to a public company? We're going to keep basically the first sentence the same. It is an incorporated business or corporation. It's a separate legal entity to its owners or shareholders, and the only difference is it is listed on the Australian Stock Exchange. What does all that mean? Well, first of all, let's start with Pty and Ltd. What do those terms mean? You don't really need to know that, but it's just good background. Pty equals means proprietary or ownership, and limited, Ltd, sorry, means limited, proprietary, limited, ownership, limited. So with a private company, ownership is limited. What does that mean? It's limited to a certain number of people. It's limited to a maximum of about 50. So one you might have heard of is Boost Juice, Pty Ltd. Or Cotton On is another one. Visy is another one. Linfox, the delivery business, that's another one. But most of the businesses we've probably heard of are actually just Ltd. They're public companies. That means proprietary isn't limited. Okay, so there's no Pty there. So BHP, Facebook, Apple, Coca-Cola, Rio Tinto, Afterpay is another one you might have heard of, etc. All big companies, they are on the stock exchange. So what we mean here is Pty proprietary is limited from 2 to a maximum of 50 owners or shareholders, but here proprietary is not limited and there is no maximum number of owners or shareholders. BHP has over 500,000 different shareholders. Okay, so with a private company, how does it work? So here's a company that's divided. Let's say there's two owners, all right, and they own 50-50. Here's another company with many owners, and each person owns a different portion. All right. So how do you sell shares in a private company? Well, it's a bit like selling a car. You say, I want to sell my shares. Who do I know that wants to buy them? Well, the shares are sold privately between the buyer and the seller, and you've got to get the permission of the other shareholders in a private company. So, I don't know, maybe you ring up your sister, your friend, your work colleague. You can take an ad out online or something and say, I have shares to sell. Who wants to buy them? You've got to find the buyer, basically. And then you've got to get all the other shareholders to approve that. And how much is the share, or are the shares, well, the share price is determined during the negotiation between the buyer and the seller. It's a bit like selling a car. You know, one person says 20,000, one person says 30,000. We'll meet in the middle and settle at 25,000. That's how selling shares in a private company works. That is completely different to a public company. Ltd means on the stock exchange. So look at BHP, this is in 2018. It had over 3 billion shares and over 500,000 shareholders. So how do you sell shares in that business and buy shares? Well, they are listed on the Australian Securities Exchange, the ASX, and they can be sold publicly. So how that works is, let's say this person says, I've got 700 BHP shares I want to sell. I don't need to find someone to buy them. I don't need to know who they are. I just put them on the stock exchange. So I'd log in, so maybe through CommSec or NabTrade, one of those. And on the other end, other people will have logged into the share market as well. Millions of people every day. They will find those shares. I don't need to know who they are. I don't need to know where they live. I don't need to get approval from any of the other shareholders. I just sell them online, and the share price is basically determined by the marketplace, supply and demand. So at the time of checking here, a BHP share, the last price was $36.47. Okay. However, on that particular day, it opened at $36.63, so it had gone down 16 cents, and it would be changing every minute of every day. And here's the volume, 4 million shares changed hands in one day. So with a public company, shares are being bought and sold all the time because it's very, very easy to buy and sell them when they're on the stock exchange. Completely different to a private company where you've got to privately find a buyer for your shares. Very difficult. How else are they different? Well, in terms of how the reporting requirements, you've both got to file your taxes, so that's not different. So they've both got to lodge tax returns and pay taxes. They've both got to report to the government department called ASIC about different things. They have to tell, a private company has to tell ASIC their basic financial info, how much profit, what do we own, but it's not accessible to the public. We also have to tell ASIC who our directors and shareholders are, and it is visible to the public. This is kind of the same as well. You have to tell the basic info to ASIC, but again, we can't access it there. But yeah, you also have to tell who your directors and shareholders are. So there's a fair bit of reporting there. But now where it gets different is with the stock exchange thing. Private company doesn't have to tell anything to the stock exchange. They're not listed on the share market, but a public company is. That means everything's got to be visible. You've got to give detailed financial results that the public can see. You can log on right now to the ASX and get the profit report, the balance sheet, for any big Australian business that's on the stock exchange. You can also get the salary of each director or manager. So that's a level of detail you can get. You don't have that with a private company. And lastly, any material info that might change the share price. So maybe there's a scandal involving one of the managers, or one of our products is defective and cause some consumers to get injured. You have to tell the public all of that stuff. The words material, anything that's material to the share price has to be published. So in summarizing that, we can say if you're a public company, there's so many rules and regulations you have to follow. Private company, there's quite a few, but not as many. But compared to sole traders and partnerships, companies are really complicated, and you've got to tell the public a lot more information than you do with other types of businesses. We've got, finally, just looking at some of those material announcements there. So this is for BHP in 2019. This is some of the things they had to tell the public. We had to say a directed change, so they might have bought some shares. We hired a new CEO. He will start on the 1st of January 2020. So that's the level of detail. And you can see there, that means it's price sensitive. So when you're a public company, that's the sort of info you've got to publish. Also your annual report. So that's where you can go onto the internet and get all the financial information for a business. How much profit, how much all the managers make. Private company